AB 150 is a response to the Tax Cuts and Jobs Act that severely limited what is known as the SALT deduction, the state and local income tax deduction. Prior to 2018, before the Tax Cuts and Jobs Act, people in states like California, New York, high income tax states were able to take a deduction on the taxes they paid for their state and local income taxes and their property taxes. And because in those high tax states, they paid so much in property taxes and state and local income taxes, that deduction on their tax return was relatively large. But because the Tax Cuts and Jobs Act, they severely cut that limit to $10,000 per year for individual. Now, states like California, New York, and other high tax states started looking for alternatives and workarounds to circumvent that SALT limitation. AB 150 is California's response to that SALT limitation of $10,000. Now, I want to point out that AB 150 has a lot of other provisions, but the only area that addresses the SALT limitation is the Small Business Relief Act. The other parts of AB 150 are an extension of sales tax exemption for diapers and feminine hygiene products. Another part of AB 150 is a tax credit on donations of fresh fruits and vegetables to food banks. There's a small business hiring credit that's been extended, and then there's an increase in the CalCompetes credit.